Everyone. This is Brad Matheny. Today is March 3rd. Welcome into March. Yep, pretty soon we're going to be looking at springtime and flowers and warmer weather, which would be nice compared to the cold I'm sure everybody's gotten. California's getting a little rain, which we need, so we'll take it. But March leads to April, leads to May, and then we get into June, July, August. Woohoo! That's when it gets real hot out here. Okay, so real quickly, we're looking at a Monday that's the beginning of the month. We closed out, this is a 2-hour chart, so I want to point out the Fibonacci price theory that we've been going over. Move this up here. We closed out above this little high right down here. Oop, line right down here. Getting above that high, do it in yellow, has now indicated that we are in a bullish trend. So we are now short-term bullish. Nope. And intermediate term bearish, which is the intermediate term downward trend that we have here. We would have to get above this level here and this level here to move into intermediate term bullish. So I'm going to move this, set this back up to green, because we're kind of in a mixed bullish mode right now. And we are longer term still bullish off of this new high up here. We have come down and touched this low, broken this low, which knocked us into bearish trending, but we stayed above these lows back over here. We have filled the gap, and now we are likely to move into this upward price channel here. You can see I've drawn it in green, and looks like I've drawn it in blue as well. But we're likely to move up into this upward price channel, up into this red upward price channel here, targeting that 600 to 602 level. So be aware that we're moving into an uptrend. Now, our SPY cycle patterns for today, let me go get them, are an up, down, up in a counter trend mode. That means that we're looking at a down, up, down today. We got a lot of upward activity. Pre-market, we're already up 0.5%, almost 0.45%. But I still believe, if my analysis is correct, that we are going to be looking at kind of a downward day today. And again, I'm drawing it a little too crazy out into the next couple of days. But I'm thinking we're looking at kind of a downward day today, maybe down into that 586, 588 area, then moving back up into upward trending around the 5th, 6th, 7th. Maybe not that aggressive, but kind of out here to the 10th and the 11th. Kind of like that. What we're really looking at here is a breakdown, then we move into a top resistance, which is market setting up a top, then a flat down day, then a breakaway, then a rally on Friday. Then we get into a gap breakaway, rally on the 12th, carryover, temporary bottom. It looks like we move into a fairly solid rally mode back over here. And then we move into this gap potential, reversal, top, flat down, breakaway. And I think this is because, remember, we're leading to that secondary breakdown, major bottom level back over here. And I think this is where we kind of roll into topping right here around the 17th, 18th, 19th, 20th. I think we're going to be moving into a pretty solid breakdown over here. So 17th, 18th, 19th, 20th would put us right around there. So this is the area that I think we're looking at, the big kind of a breakdown into that low. Okay, so it gives you an idea of where we're at and where I think we're going to be looking at that breakdown. If I'm correct, it's going to be somewhere in this area. We start to get that breakdown into that secondary major low that occurs out here around the 21st, 22nd, 23rd, 24th. And that's going to be really more like in this area, setting up that big major low. So after today's pullback, I think we're pretty much going to be melting upward into this 600, 603, 604, maybe 605, 606 area. I've kind of drawn it fairly clearly here. Here was the big breakdown I predicted. Now we move into this excess phase peak pattern. And then once we get this breakdown here, we're going to be moving into a deeper low below this level here. So you must understand that, we're basically setting up this low, whoops, this low level here that we are going to break down below. Okay. And that is going to be our ultimate breakdown. So if I am correct and we do get this breakdown the way I'm expecting, this, whoops, this breakdown here is going to lead to a consolidation level. Now, if we just touch this level, meaning we get down to the 582, 583 level and just touch it, then we're going to move back over here into consolidation into this range. If we break down, we are going to move into consolidation that is going to cause us to move down into these lower levels and consolidate. Okay. So we are taking it day by day to determine how we're going to play this out. Right now, I'm expecting a bit of a fairly solid open with a bit of a drawdown, meaning a melt downward today because of that down, up, down pattern right here. This down, up, down pattern. Remember, it's up, down, up in counter trend. So I see down, up, down. And we will see how that plays out. With regards to the QQQ, basically the same thing. Oh, a bunch of lines, Brad. I have to clear this up a little bit. Hold on. So here we are. Get rid of that. Get rid of that. These were all drawn last week related to a potential breakdown. And where we're at, guys, is really same scenario here. Off of these lows, again, this is a 2-hour chart, confirming back off of these levels. It sets up almost the exact same excess phase peak pattern. We're looking at a moderate little melt up in general trending, maybe up into this 520, 525 area. But today we are looking at a potential opening of price moving down into this 505, 504 area. Then we will move into upward trending, maybe up into this area, stalling out till around the 17th, and then breaking down pretty hard around the 21st through 25th area. And in the NASDAQ or the QQQs, we're likely going to break down harder. And that would put us into a much deeper downward trend. So currently, whoops, let's take a look at this. So currently we are bullish off of that same trigger. You can see it right here. This little high broke above that little high right there. Mark it in blue so you can see it. That gave us a bullish breakout to the upside. So we're short-term bullish and intermediate term bearish and long-term bullish. Obviously, if we were to get down below these lows on a longer term basis with confirmation, we would turn to longer term bearish, but we're not quite there yet. I do expect it to happen out here in March, but we're not quite there yet. Okay, so now metals. I haven't taken a look at metals except yesterday, getting a nice little recovery here. Silver is up. This is a 2-hour chart for both gold and silver. Getting a good rally, and boy, do we need it after this deep move in gold. I mean, look at this fairly solid selling since the 22nd, 23rd, 24th of February. This is the washout bottom. Now, the washout bottom normally takes 2 to 5+ days here to kind of wash out before it's going to start to rally and really break loose. So, you could be looking at a move out here in March 5th, 6th, 7th, this week, end of this week, and early next week. We'll see how this plays up with gold and silver. Again, silver setting up a good solid base here. Maybe we're going to get some kind of a recovery and then pause and then rally up a little further. I think that would be very likely. Gold, we'll have to see. I mean, I think the reality is that gold, if it really made a move, in my opinion, if it just was a fairly deep V bottom like this, then more than likely we're going to come back up to this 2940, 2950 area and then try to rally back up here very quickly. So let's see how this plays out. Gold and silver rallying off of this low is good. I like to see this. This is right in line with my longer term expectations. The pattern for gold and silver today is a breakaway, and we are in bullish trending and explosive trending in carryover mode. Then we got two nothing days. Then we have a rotation pattern in carryover mode, and then a top resistance in counter trend mode on the 7th. That top resistance pattern on the 7th, which is out here, would be kind of a bottom. Let me show you. 7th. So here's the 7th. And what that would be is kind of a base bottom mode like this. Same thing out over here. We would be looking at kind of a base bottom mode like this, meaning that we would be looking at some type of a fairly solid rollover basing bottom type of mode, like a V bottom or a finding support and bouncing and rallying. So again, we're looking at a potential nice rally here this week. Let's see if it holds up. Big move here in silver. Got to get above this, call it 3240, 3250 area, 3255, let's say. And gold, honestly, I'd like to see it above this 2940 area to accelerate. But again, that's not too far away. The way gold moves, moving up 30, $40 could be one day. So really quite crazy. Okay, lastly, we will come over here and take a look at Bitcoin down $1,000. Now I had a big recovery after that selling, ran right back up into our resistance area, stalled and rejected. So, what are we looking at here, guys? We've had President Trump come out and issue news about turning the US into a crypto reserve and really opening up laws. I think overall that could be very good. This is a very deep low. If you do understand, this is a 2-hour chart. If you do understand how these excess phase peak patterns work, then I want you to understand this. I'm going to draw it real quick. We've now established a new low and we're pulling back up to here. We're likely to establish an excess phase peak pattern here to the downside. So draw it in a very dark color. Oop. Where did I go? Drew the wrong ones. Hold on. Kind of early in the morning here. So, and here we go, a downward excess phase peak pattern. So here we go in the sense that, we've got this upward pattern playing out and we've got this downward pattern playing out. You can see we've come down, we've moved off of this. This is really no longer valid because we've got the sharper move higher. So the way I would explain the downward move is that we have this move down coming into this kind of an excess phase peak here. And then we've got this move down coming up into this excess phase peak here. So the rejection here okay, would indicate that we would then move into this downward trending. Okay, and that downward trending would be an extension of the downward price cycle. Rejection of this would mean that we would have to get above, really this level here. So when you think about it, this is our last high way up here. You can see we ran into rejection here. So let's just say that we would have to see Bitcoin move above 98, 99,000 in order to resume bullish trending. Currently, we're moving into this downward cycle, which means that we have this upward pressure cycle, which could resume into upward trending here by getting above 98, 99,000. This breakdown to me very clearly indicates a new low. And this new low sets up a very solid bearish downward trending. We have yet to now stand out or short term. Oops. We are currently now bullish because we have on this 2-hour chart, we're bullish short term and bullish intermediate term. The reason I can tell you this is because we've gotten above these lower standout levels here and here. And that's a very clean breakout to the upside. You can see here and immediately, but longer term, we have yet to really break above any of these upper critical levels here. So we are still bearish off of this breakdown low. Longer term, intermediate term, we're bullish, bullish. We're really, guys, we've come right back to this level, this green level. We've rejected, and now we're likely going to come back down. That's the way it is. So expect a little bit of downward pressure here. And as I mentioned to you in the updates last week, we're moved into consolidation here. So what I really expect is, and if I draw it for you, you might be a bit surprised, but wide range consolidation over here. I really expect there in dark purple. I really expect big volatile sideways consolidation between, call it 80 grand and 92, 93 grand. I think you're going to get into a big consolidation phase here for Bitcoin, just kind of like we saw here. Big, wide consolidation phase, eventually flagging out, which will give us a new breakout phase back over here, March 15th, 16th, 17th, which, remember, that leads right into my March 21 ultimate deep low right over in this area. Okay, that's where I think we're going to get the breakdown in the markets. So if we stay in consolidation and consolidate out over here and the markets do enter a big solid breakdown, we could see another big breakdown here in Bitcoin setting up around middle end of March, around the 21st to the 25th of March. Okay, so I'm going to be on the road today. Got a little family stuff to take care of, nothing too serious. I will not be available like I normally am, sitting in front of my computer, because I got to be driving in California. If you guys know anything about driving in California, you know that it takes a bit of time, and a 30-minute drive can take 2.5 hours. So that's just the way it is. In the meantime, like I said, let's look to try to find this, moderate breakdown in price today. I think you're going to be surprised that the markets are not going to try to hold up very well today. If my patterns are correct and my research is correct, we're going to be looking at a moderate down pattern, maybe back down into the 590. I mean, we're up in this area right now. If we were to open right now, up in this area, and come down to where I think you're talking about 589, 590, and then we roll up into an uptrend after today. We start moving into a pretty solid upward price trend after today. So technically, buying the lows of today would probably be a pretty smart move based on my research. Okay, guys, go get some today. Talk to you later.